Hi everyone, welcome to another session of Inner Circle program. This month we are starting a new topic, becoming finance business partner, and also included in that topic is the developing business acumen. So it has been a little while, but we are back. Welcome back everybody, and just tell me that if you can see my screen and hear my voice clearly. Anyone just put in the chat box so I could ensure that technology is working fine. Okay, good. Thanks, Shailesh. Okay, so this month we will try to do in three parts, three sessions, and I try to make some adjustments based on some feedback and some observation that we are doing every month, three sessions. So today is the first session for 16 September. Then we have the second session on the 23rd and the third session on 30th. So topic is becoming finance business partner. So first, let me give you a little snapshot of the remainder of the year, what we are going to cover in this program. So this month we are covering finance business partnering. Next month is a very interesting and important topic of advanced career planning and job search strategies. That's what we'll cover. And in November, we'll touch the sensitive topic of how to handle workplace politics, conflicts, advanced level of relationship, etc. In December, we'll address how to create a strategic thinking and developing in a strategic mind. So this is the short-term schedule for the remainder of the year. This month, what we'll do, we are starting with the coaching session today on the finance business partnering. But since the topic is a little diverse, what I have decided to do is the second session next week we'll try to focus on developing business acumen. And these are not two separate topics. These are very, very much related. And that is why I thought that it would be appropriate to really spend sufficient time on each one and also understand the relative connection and importance of the two. And the third session, I would like to bring some case studies around the same topic of finance business partnering and business acumen. Now, compared to the earlier format where we have the second session as the group Q&A and third session as the external expert, I'm not sure if we were really getting good value from the external expert. So we could still bring someone if you find someone very compelling and very useful. But otherwise, third session will try to spend more on case studies on the same topic. And for question answer, it's open to anyone, anytime. So as we have the practice that during the lecture, if you come up with a question, just drop in the question box or chat box, and at reasonable intervals, I'll stop and pick up the questions from there. So I think that is more effective way really handling the question answer rather than really waiting for the second session for all questions to pile up there. So I hope everybody is comfortable with that format. Okay, good. So finance business partnering, and I'm not sure that everybody has a very clear understanding of what finance business partnering is. So let's start with this basic definition of what finance business partnering or who is a finance business partner. So a finance business partner is a professional from the finance or accounting department who most of the time works alongside the business areas, the non-finance area, or non-finance professionals and executives and managers, and basically supporting them and advising them on their business process, strategic and operational decision making through insights, ultimately for the purpose of driving business performance. So many times these non-finance people need help with the numbers or analysis, mainly analysis. So that is where the finance business partner provide support. Now, what finance business partner do specifically, by the way, there are different variation of this role in different organizations. So it is not the one standard way the different businesses or companies operate, typically a finance business partner is involved with strategy formulation, implementation, and communication if there is a process. Not every company has a strategy formulation and implementation process, but most of the time in the commercial decision making, where they need help with the decision support and analytics on the operation side, and so they try to lead business and financial analysis, and also depending upon the level of maturity and business judgment, these finance business partners also get involved into the discussions, commercial discussions, and advising them or being served as a soundboard, those type of things. But that is really, it's somewhat at the advanced level. So not every business partner may be involved in that that process. And this is again basically to help with the business decision to the non-finance business partners. Now, the finance business partner term or title itself is not very popular, but different companies use different titles. So I would say that most common role of finance business partner is done by CFO. So CFO is the Chief Financial Officer, but in the capacity of the as a CFO, CFO is also doing a lot of work as finance business partner, and that is the level where the CFO is involved at the board level, working as a day-to-day strategic partner to the CEO, and high-level involvement and interaction with the business world, and also a lot of involvement in the business strategy and the policy matters. So that's one thing. So it's not the role by title, but the role is by function. Then in many companies, finance directors are very much involved in the similar activities as the finance business partners. At middle level is a controller, who has a lot of things to do on his own on the financial side, on the accounting side, but also plays the role of a finance business partner. And different terms again, controller or financial controller. And some companies have the specific positions with the title of FP&A or financial planning and analysis, or simply financial analyst or analyst. These are all fall into these finance business partnering. Decision support is the main function, so they could provide another title like decision support specialist, something like that. And also, very common term is management accountant. Excuse me. So management accounting is support to serve the process of the management accounting, and some companies call with that label as well. And some modern businesses have started to adopt the practice of really calling these professionals as finance business partner, but not many. As I said, this role is very traditional, it's not new, and different companies have different practices as far as the title is concerned, and even the scope of activities is very different from company to company. In some companies, this role is very, very important. In other companies, their role may be just superficial and not very important. I'm curious to know from you, who think that they have the role of finance business partner? So just give me, let me open a quick poll for this. I think you should see on your screen now. Wait a minute. Yeah, just answer that into that box if you are a finance business partner. Okay, so there is only one person. Now again, you may not have the title of finance business partner. You may have a role of controller, but you do work with the non-finance people, right? You may be CFO and you do work with the non-finance people at high senior level. So it's not by title. If you think you are involved with the finance business partnering, which means that helping the non-finance managers, executives, professionals, then you are playing a role of finance business partner. So again, look at that from that point of view and give me an answer. Okay, so from that point of view, most people are basically some somehow involved into that function, finance business partnering. Now, what is the requirement of finance business partner? First of all, if you are going to work outside finance, even if part-time, not full-time, you need to really understand the business first. And that is how this is called finance business partner or finance business partnering. Unfortunately, finance function is not considered as the group of people, generally speaking, who are very well versed in the business affairs. Usually people label finance and accounting people as bean counter or bookkeepers or accountants, and they are very commonly criticized for lack of business acumen. And there is truth in it to some extent. As I said, it really varies from company to company. Mostly it depends upon the individual person. Some individuals have very good business knowledge and expertise. Most individuals in finance accounting functions do not have that level of expertise and knowledge. The dilemma for finance and accounting people is that we think we are financial expert or accounting expert. And that is where we focus. That is where we shine. That is where we spend our time. And that is what we show to the world as our brand. So most of you, I believe, you are a qualified professional accountant like CPA or chartered accountant or CMA or other similar ACCA, similar qualifications. So let me know. I'm opening another questionnaire for you. If you have one of the credential like this professional, certified professional accountant, CMA, CPA, or chartered accountant, yes or no? Okay, so most of you are qualified professional accountant with some certification, right? And that is a standard requirement at least at the managerial professional level. This is a general requirement in the market that you should have a certification in professional accounting. And the average time and effort you spend to get a certification like this, depending upon the different program, different places, is usually 4 or 5 years, easily 4 or 5 years. So 4 or 5 years you spend your life learning accountancy and finance. And accountancy and finance is a little bit different than other functions like marketing, like sales, like HR. So there is a lot of technicalities, and everybody cannot become a professional accountant without these certifications. Now, some people are there at the senior level without certification, but it requires intensive training and learning and education. Now, you commonly see people moving across functions in business organizations, like someone working in logistics, and they move to the production, for example, or production to the logistics, or some people working in HR, they might move to the marketing and vice versa. So all the time these transfers take place. Finance people could go to the other functions. Like I have seen many people successfully moving to the sales and finance or HR or logistics or operations, but those people cannot come to the finance without experience and without professional qualification. So that is the specialty about finance and accounting, that it's a highly technical area, and not many people without formal training and development and certification, they cannot do that job. Now, the consequence of this level of understanding is that we the accountant thinks that since we have already gone through 4, 5, 6 years of training, we need to be a perfect accountant, and we become perfect accountant in many cases, which means that in our mind, consciously or subconsciously, we do not pay much attention to the business learning. That look, I'm already a controller. Why do I need to learn marketing? Why do I need to learn about HR? I'm doing my job, and that's my specialty, and that's my brand, and that is what they try to portray to the outside world and other people. And that becomes a problem because not only that it restricts your personal brand to a certain level of expertise, finance and accounting, but also changes your mind. Finance and accounting training is very technical oriented, very number oriented, and it reduces our ability to think differently. Most of the time we are thinking very structured. Look, all the fundamental accounting principles, objectivity, historical cost, tangibility. We started to think in these terms. We lose the ability to really see intangible things. And today's business model, as you might notice, are more and more intangibles. In most of the large businesses, 70–80% of their assets are intangible and they are not on the balance sheet. And that has becoming more and more of a dilemma for finance people. So we'll talk about these things in detail in the next session. But the point I'm trying to bring here, that it's a very challenging task. And it's not only a technical role being a finance business partner, there is a lot of expertise required from being a finance professional. And that is why you will see very commonly some very good examples where the people are playing a very good role of a finance business partners, and in many cases they are really not doing well, and they are not respected well, and they are not providing a good service to their customers who are the non-finance business people. So that brings me to another question. What do you think about this question? Do you think finance is a controlling function, or do you think finance is a supporting function? Answer one of the other, one of the each, one or the other, I'm sorry. What do you think, in your personal opinion, finance is a controlling function or a supporting function? And I know some of you may be smart enough to say that, well, it's both. Yeah, that's true, it's both. But what do you think is more dominating? Is more controlling or more supporting? Okay. So majority of you are saying it's supporting function, but there are people who are also saying that it's controlling function. I know many of you have been attending my training and my coaching, so you have a clarity to understand what this role is supposed to do. So yes, the truth is that yes, it's a controlling function as well as a supporting function. But how people see you? Do business people see you as a policeman, as an auditor, or do they see you as a business partner or a decision support professional? So yes, there are areas where you have to exercise controlling in a very disciplined, very strict manner, but the overall branding of finance and accounting should be a support function, and that is the key. And in most of the, again, it depends upon the organization culture. Some organizations really have very supportive finance functions, and some organizations have an image and brand like a policeman or an audit function, controlling function. So why it is important? Now, many organizations, many CFOs actually, many finance department and many finance professionals do not worry about their image. And they think that their job is not becoming friend. Yeah, that's right. You don't have to become a friend, but image of the organization and your branding, whether you are a controller or you are a support person, is very, very important, because when you work with the business partners, non-finance people, that really plays a very effective role. Usually what happens, what I have seen in my career, and you must have noticed as well, that based on our knowledge, based on our education in finance and accounting, we think that we know all business, right? And very commonly the so-called finance business partner would go to the marketing people or sales people or business people and look at a P&L and tell them that, look, you are not making money, this is a loss-giving product or low margin, and you should increase the margin, without really understanding the complexity of the business models today. So today's business model is highly complex. And it's not that simple. It used to be, but it is no more that simple where you could look at a P&L and decide whether that business is doing good or not. Now, again, pure financial terms probably is true. You could look at the profitability, but today's business complexity really has made the business cycle much complex and much longer. So a P&L does not tell you all how the business is doing. And that is what we'll talk next time, that what are those business models and how do we need to, now you don't need to do an MBA for that part to understand the business, or you don't need to work in the non-finance. Remaining within finance, I think with some informal education, informal training, you can learn all those things. But it's very important that when you deal with the non-finance business partners, whoever they are, whether they are in marketing, sales, or business management, you talk their language and they don't look down you as an accountant or a bookkeeper or a bean counter. That's very important. So relationship is very important. And with the relationship, with a good relationship, it becomes very easier to work in the teams, cross-functional teams outside the finance department. And what I call this quality of finance people is service orientation. That are you service oriented or are you control oriented? And in my personal opinion, I think the people who are supposed to play the role of finance business partner, they should even also have a customer service training to really change their mindset. Because again, that service orientation does not mean that you agree each and everything from those people. You have to maintain, and that's why this role become more challenging. You have to maintain your professional independence and a business maturity to agree or disagree with certain things in a very respectful manner, not impacting, not destroying the relationship between the two. And very commonly, it is observed that many organizations, the finance people are involved in the business, but they are not trusted enough. If they are not trusted enough by the business partners, they are not able to really play their effective role. So trust is a part of the relationship, right? Again, as I said earlier, many people don't understand the sensitivity around this role, how important. It's not a technical role only. Yes, you need to have a good technical expertise and command, but it also requires a lot of soft skills, and relationship and communication are one of the few. You have to really have expertise and good level of command on these functions. So to enjoy high quality of internal relationship, you have to have a degree of service orientation, which normally is lacking. Normally finance really has a mindset of controlling and directing, not really service orientation. So that's the one thing about the success of the finance business partners roles. And this is what I said, that in my opinion, really CFO need to take care that at least they provide not the typical, the traditional customer service training, because that is for the service customer service people, but some sort of similar training to understand how do you serve your customers, and how do you agree with them, and how do you disagree with them in a professional manner. Now, to another important prerequisite for a successful business partner function is that not only that you should be capable in terms of the technical as well as soft skills. So finance capability is definitely very, very important. But the other important part of the equation is that is there enough demand in the business for those services? I'm looking at the question box, and look, again, if you ask my opinion, there is a question whether treasurer is finance business partner. In my opinion, every person working in finance and accounting is a finance business partner to an extent. Not full-time, but to an extent, because you do deal with people outside finance. Even someone working as a payable administrator, they have to deal with purchasing department most often, right? If you are working as a AR, accounts receivable clerk, or accounts receivable administrator, you have to deal with the salespeople, right? So everybody has to play that role of finance business partner to a certain extent. That is why it's very important that we understand, no matter what role you are doing, no matter if you're a CFO or a controller or an administrator or a treasurer, you need to understand that role, because you will be interacting with the non-finance people in any organization you work for. So the question is that, yes, even if you create enough capability in finance department, finance function, is there a demand? Are the business people really looking for your help? Because if they are not looking for your help, you can do that role. And that depends upon how the finance function is looked upon in different organizations. And I know that some organization finance function is very important, very respected, and they do their job very professionally. And some organizations, they are looked down. Actually, they are considered bean counters or accountants, really not knowing the business, and that is how they are not really got involved into the business, because there is no demand in those organizations. So here is my next question to you. In your organizations, give me a second. Tell me, in your organization, how the finance function is looked upon. How important, well respected is finance function in your organizations? And there is a little multiple answers, so you can pick one which you think is most appropriate for you. And that would reflect basically the culture of the, it doesn't mean that finance is really capable or not capable. It basically tells you how the culture of the organization is. So majority of the people are saying that it's reasonably well respected. Quite a number of you are also saying that it's highly respected, and there are also many who are saying it's moderately respected. Nobody is saying that it is not at all respected. Okay, so that's the average scenario. Basically, if you go outside and do a formal research, probably you would get the answers on the same pattern, that yes, there are organizations who are highly respecting finance function. So there are a couple of things to really which basically determine this this type of culture or this type of situation. CFO plays a very important role in creating a brand and image of the finance department. CFO is one person, but how that person deals, that person is the leader of finance and accounting, right? And that person reflects the attitude and the branding of the whole organization. Now you may be at a controller level and you may have a very different habits, different type of relationship compared to CFO. But if CFO is really not looked upon as a professional, that would also impact your position or your relationship, because you are working under the influence of the CFO. Let me close this poll. So ideally, not only that finance should be very capable in terms of providing the expertise and service of a finance business partner, but also there should be good demand, and good demand comes with the culture of the organization, number one. Now, I said that CFO really has a big influence on the image and branding of the finance department. Well, the second person who has very big influence is the CEO of the company. If CEO is not respecting finance function, or not respecting CFO, or not really giving due importance to the finance function, that influences the whole organization. The whole organization does not give importance to the finance or the finance professionals, and they don't really need them much for their help. So these are the couple of things which significantly impact the environment and the culture in which the finance department operates. So I'm looking at the question box, and there is a couple of things. Let me look at that. Yeah, as I said, it happens many times that you are working for a person, CFO or a senior person, who has very different work ethics uh, than you. And since you are working under that influence of that person, that does impact you, and you bear the cost for that part. So in that case, my suggestion is that, look, first of all, there are certain rules you should never violate. Never try to compete or disagree with that person in the public. Now, you may disagree on a personal level, one-on-one level, but never disagree, because first of all, as a professional uh, who follows all the ethics, you are working in a system. You are being paid to work for that person. Now, I have seen in many situations that people disagree with their bosses and they're not cooperating. That's completely wrong. If you have that level of disagreement where you don't want to work with your boss, leave that job. But if you want to work, if you continue working for that organization, you are paid to follow that organizational structure where someone is your boss, and you need to give that person due respect professionally. So in that case, as I said, don't show your differences in public, but take them up one-on-one. But at the same time, what you need to do, try to establish your own brand to an extent where it's not conflicting with the department or your boss image and brand. Develop your own relationship with the people, and people will have started to see you differently. So it's not a perfect solution, but it's really making up the deficit, that if something is not working based on that situation, what you could do. So this is what you could do. Try to establish your own personal brand and try to establish your own relationship, not impacting your boss relationship and his branding in such a manner. Now, another big challenge for finance people is, give me a second. That while you're working with the business organization, non-finance people, you are designated as finance business partner. The partner in general terms, as you know, is really helping and working together and agreeing. Now, this is a partner role, but really you need to be very careful that there may be situations where you have to disagree professionally with your partners. And I could give you a quick story from my own career. Once I was working for a company where there was a CEO, and you know that the accounting principles have become very rigid around revenue recognition. So in that company, what happened was that usually at the end of the month, the salespeople, the business people are very eager to book as much sale as possible, and they push very hard to finance or the department who books the sales to that level. So at that time, finance usually have to be very careful what is they are allowed to book, what is they are not. So in that company, it was the last day of the month, so sale was being booked very aggressively, and I was not in the office. And my manager, who really works for this sales booking and receivables, he was pushed by the CEO to book a certain sales which was not supposed to be booked based on the revenue recognition principle. Now, look, the situation, the political pressure. That person working for me was in the finance department, but look, CEO comes directly to that person and tells that person to book the sales. So what that person did, and I think he did the right thing, he did not refuse. He said, okay, let me look into it. And he called me first before booking the sales. And he said, I'm in this situation. What should I do? Should I go? And I knew that if he declines to CEO, he would really lose tempers and it would be very bad. So I said, okay, book it. No problem. I'll come tomorrow morning and see it. So it was the last day, but you have 2 more days to really make adjustments. So next day when I came, the first thing I told him that now is reverse it without really checking with the CEO, because I knew it was wrong. I had no doubt in my mind that this was not right. So I asked to reverse the sales, and then I went to the CEO as my way of really respect and my obligation to my boss. He was my boss, and explained that, look, based on this, we cannot book it. And even if I book it, auditors, our external auditors, are going to make an objection. So what I did many times in these situations, I put the burden on external auditors many times, very tactfully, and it worked very well, because they could argue, why are you agreeing or not agreeing, but when it comes from the external auditor, there is not much argument. So that is how I handled a tough situation where it might ruin the relationship, but it did not. Now, you don't want to build up your brand around these type of situations. You also need to, as a CFO or financial controller or a senior level finance professional, you need to create a brand around support. So another similar situation, sales was trying to book sales, and system was not allowing. SAP system was there, and it was not allowing because there were credit limits set in the system, that if customer really go certain level of their credit outstanding, new sales order would not be booked, right? You are all familiar with these situations. And again, sales managers, vice president, CEO, they all wanted to book the sale. At that time, I could have taken the same stand, but it's a different thing. It's not about the accounting principles. I have flexibility. I was authorized as a CFO to change those credit limits. That's exactly what I did. So I showed my support and reduce change the credit limit for that particular customer and book the sales. They were very appreciative. So you need to have a very good level of professional judgment. Where do you want to take a tough stand, and where do you want to show your flexibility? And you need to ensure that your brand is being established around flexibility and support, and not about being a policeman and controller. So I hope I addressed this question. I'm trying to fix something on my computer. Give me a second, please. Okay. Now more questions are coming up, so I was trying to get those questions. So when it comes to the relationship, I think we have covered that subject thoroughly when we had the relationship session in this program. So I would really not go deep into it, but I would say that relationship itself is very, very important. Whichever role and position you are working, because relationship is the key to really get the job done. And it doesn't mean that people are doing favors to you or you are doing favors to people, but relationship really facilitates the process of really moving forward in your negotiation, in your communication. So this is an interesting diagram to explain the challenges of the finance business partnering. And if you look at most finance department, maybe it's your finance department or you know someone, that if they are not doing a good job on finance business partnering, their main complaint is that they don't have enough time to really do business partnering. They don't have time. They are very busy in closing and booking the numbers and doing what or what not, and they don't have time to really do business partnering. Now what happens when you are not involved, not engaged in the business, you basically are establishing a certain brand for the finance, and people started to look you differently, which means that if you're not involved, finance does not understand business. That's a image perception is created. Based on that, people think that you do not understand business. The truth may be different. Truth may be that you understand business, but because you're not demonstrating that, because you are not communicating in your dealings and in your relationship, you're looked as someone not understanding the business. This means that if you're not involved and those people from outside, they are not seeing you as understanding the business, they are not coming to you for any questions or any help. You become unable to really solve business problems. And business does not see that you are adding any value. Business started to see that you as number cruncher, right? Which means that they would argue, including the CEO and the business head, they would argue, why do you need more people? Because you are only number crunching, you are only maintaining the books, why do you need? And that may be a pressure for the headcount reduction. Well, if you have headcount reduction, you again in the same vicious spiral, lack of resources to do business partnering. That is what happens with most of the department, because they are less sensitive to their image and perception and relationship. They get into this spiral and their position is diminished in the organization. Now it's very important to understand. Now let me take a step back and clarify something on this program. When I'm coaching you any subject in this program, I'm bringing a lot of practicalities. And practicalities involve the politics part of the organization, which is very important. Now, office politics is not always bad. Sometimes it's also used in a positive manner, but it is there in every organization. It's not taught in the business school. It is not much talked about, but it exists everywhere. And in most situations, if you are in a certain level of seniority, you always get impacted by that. So in my coaching, because this coaching is very practical, I try to give you directly or indirectly some aspects of the political part of the organization. And the political part of the success of finance department and CFO is that you have to have very good brand established in the organization, how people see you and your relationship. So in this case, the example I shared with you earlier, my disagreement with my CEO on one situation and another I'm agreeing, that is how I maintain my relationship. Now, I did not spoil my relationship with the CEO even after reversing the transaction, because I had a very good, deep relationship. And I think in the relationship topic, we also discussed very strong concept coming from Stephen Covey, emotional bank account. That look, you do the people who are important in your life, whether they are from business or from personal life or family, if they are important, whenever you have an opportunity, you make deposits in their emotional bank account, which means you do favor to them. You do favor. You don't wait for them. You just do favor. If you are doing more favor, basically you are making your deposits very high in their emotional bank account. If something goes wrong, you do something wrong, so you withdraw from that emotional bank account, but it does not hurt the relationship, because you have already done so much with that person that your deposits are very high in their emotional bank account. And if something goes wrong, they are annoyed, disagree or angry with you. It does not hurt the relationship because you have a large balance. That is how we need to maintain and establish our relationships. And I had a very good relationship with that CEO. So this particular incident did not really hurt at all. Okay, so in modern organizations, so the people or the CFOs or the senior finance professionals who complain that they don't have time for finance business partnering, that argument does not have much weight in today's business environment, because modern organizations, finance has more capacity to serve as finance business partner based on the few factors I have listed here. So most organizations have strong ERP systems, SAP or Oracle, or there are a lot of other systems, right? 10 years ago, maybe 15 years ago, these systems were not there. Now, this ERP system has significantly improved the efficiency of the finance department significantly. There is a lot of automation because of those systems. So that has created some capacity for the people. At the same time, since turn of the century, when there were some high-profile corporate scandals like WorldCom, Enron, since then we are living in a compliance era, Sarbanes-Oxley, and based on that, public company or private companies or whatever the size and the nature of the organization, they have focused on documenting their policies and procedures. So today's average typical organization has a lot more documentation and formalization of policies and procedure. Now, how does it make a difference for finance? If you don't have written policies and procedures, many times the situation as a CFO, if you're a CFO, many times question will come to you whether we should do it or we should not do it because there is no policy, right? And if you decline, it leads most of the time into arguments and discussions. So there is a lot of time is wasted. Now compared to that, if you have a situation where you have written documentation and policy, there are less questions, right? Instead of people asking you, they would look at the policy document and find out the answer. And since it is documented, written policy, already agreed, signed by the CEO, nobody would argue much, right? So that is how, this is also very common. So not only ERP, the amount of the documentation has significantly increased. That also reduced the pressure on finance, right? With ERP systems, most of the reporting nowadays in good organization is based on the real-time basis. Well, that has significantly eliminated the burden and pressure on finance to create manual reports. Now I know that spreadsheet is still very popular software or the tool, but most of the reports are really coming from directly from ERP systems. That is another thing. Finance has significant relief from the pressure of the work. So based on these things, I mean, in practical business environment, you can always keep busy. That's not a problem. So what happened, many finance departments have gone through this cycles and phases and improvement. And what happened that they did get benefit from ERP system. They did get benefit from more documentation on policy and procedure. They did get benefit from the more automated reports, but at the same time, they created additional work for them and they always kept busy. They remained busy, they looked busy. Now, many of those activities may not be value added or relevant, but they are all busy. And this is the role of a CFO or the head of the department to really look into those activity analysis and find out what is valuable, what is not. And if you are not doing finance business partnering based on those activities, it's not a good deal because you are missing an opportunity through the finance business partnering which you are not availing. So finance business partnering starts with understanding the business. We don't usually get the formal training in business knowledge, or we don't usually get MBAs. But as I said, that you don't need to go back to the college. You need to really understand and involve into the business, and simply by involvement, simply by your interest into the business, you start to develop a very good knowledge of a business. So availability of time, availability of the right people, understand the business, and then having a level of maturity, a professional judgment to balance between controlling and business partnering. That's probably the most critical issue for finance business partners. Finance business partners in those organizations where you have dedicated people who work with the businesses, they are also usually asked to report to another boss from the business. So while you have one reporting line, because you are part of the finance function, you have one reporting line to the CFO, you may have another reporting line to the business partner or the business head. And many times it is also possible that physically you are located outside finance department and you are working in the business division. Another very relevant issue is the direct reporting, dotted line reporting, or the solid line reporting, which means that in those dual reporting roles, who is your direct boss and who is your indirect boss? And again, there is a mixed bag. Some organizations have the direct reporting lines to CFO. Some organizations have the direct reporting line to the business head and dotted to the CFO. And I hope you understand the difference between the two. Now, the consequences, and I myself worked all of my life in dual reporting, all of my life from the very beginning. So I had a lot of experience of that. In fact, sometimes there were 3 bosses. So I took it as an advantage. I took it as a ability to manipulate, not negatively, but positively. The dilemma is that many organizations who have, so there is a very important element of trust, that when you are working with business partners, whether you are trusted or not. In many organizations, finance people are working, but they are they are seen as the spies from the CFOs. They are not trusted that this person is really the loyal and devoted to CFO, and they are working as their agent, so they never share the important information with them. Especially in those circumstances where if you are a finance business partner and you have a direct reporting line to CFO and only a dotted reported line to the business partner, most probably they are not going to trust you, because you have your career, your reporting, your compensation, everything is dependent upon the CFO. Now, modern organization, and this is what I have seen in most of the multinational companies, that they have a solid reporting line to the business partner, finance people. So you are a finance professional, you are working in finance department, but your direct boss is the business boss, and CFO only has a dotted reporting line in most of the modern and multinational organization. And I think those of you who are working in the, there might be some exceptions, but this is what I have seen, that most of the organizations have that type of reporting. Now, advantage is that if you have a direct reporting line with the business head outside finance, it helps to create a relationship of trust, because that person may be more involved in your position and your responsibilities, even including the compensation decision or your bonus decision or your rewards or salary increases, those type of things. So that really helped, and that is why the most modern organizations really decide in favor of having a solid reporting line. So ensure that without trust, this function cannot work. Somehow there must be a level of trust. So how do we build up the finance capability for business partnering? Or if you are a finance business partner, or if you want to move to the finance business partner, what is really needed? So critical components of successful business partnering are, and again, this list I'm showing you may be different typically what the finance people say or CFO says, because they start with the technical capability. I start with the service orientation. I start with the attitude or service orientation or your personal brand and your relationship is more important than your technical capability. If you have very high level of technical expertise, but people don't like you, you don't have a relationship, people don't trust you, it's all wasted, right? Now, if you have good relationship, you are trusted, you can learn those expertise, technical capability, you can learn that very quickly. But you cannot learn these soft skills very quickly, right? So attitude, service orientation is number one, that you are really passionate to support business and help them. You don't see that as your burden, but as your really passion. Then comes the business knowledge and understanding. Really, not only that generally you understand business, maybe you are an MBA, but do you understand the specific business model you are working on, the company you are working on? What is that? And next session, I will explain you the value creation process, which you could apply to any business model and industry. That's the fundamental. Do you understand how the value is created in your business? Because that is the basic purpose of the business. And as I said, that majority of the finance professionals have very superficial knowledge. They look at the P&L and they start criticizing the finance or the sales or marketing department for not making money. Interpersonal skills I talked about, so very important. Analytical skills, time management skills, and professional judgment. Very important professional judgment. This is what I said, how to balance between being a partner and being a controller or being someone who disagrees. And this, how to handle that situation. Not only that you make an opinion, but do you have the enough confidence, enough courage to stand up and tell to the business head that you don't think that idea is good or that idea is right. That's the main challenge. Not only analytical is easy. You can analyze the situation very quickly in your mind and reach to a conclusion whether it's right or wrong. Do you have the courage to stand up and tell on their face that this is not right, right? So all these personal qualities of finance business partners are very, very important. In addition to the personal qualities, two more things about the structure of the finance organization and systems and processes. Because if you don't have the structure of finance organization, if they designated you as a finance business partner, but you also have dual responsibility to do a lot of other things in finance, you cannot do that. You have to be a dedicated with clear mindset to serve them. Systems and processes, do you have the enough analytical support? Do you have the high-powered ERP systems to run through your analysis, or you are really dumped into doing work on the spreadsheets? The role of the finance business partners is not really spending time on the spreadsheets. That's waste of time. You should have sufficiently robust advanced system to do some work, but not spend your life over there. Your life to be spent discussing with the business partners, guiding them, coaching them, learning from them, not really crunching the numbers on the spreadsheet. Now, in most of the cases, at the mid-level or junior level, you see finance business partners are really spending their time on the spreadsheets analysis, and they think this is what their job is. Completely wrong. This is an actual study about the way finance department operates in most of the organizations. So there is a benchmark, ideally what it should be, and then this study is focused mainly on the mid-sized organization, because that is where they have the problem. So look, typical functions like decision support or business analysis, and then reporting, transactional accounting, and management controls, compliance. Finance department is notorious for having emphasized more on the control side than on the really decision support side, and even today this is true. Most of the finance department is spending their time on control and transactions and reporting side, and less on the decision support. Whereas the benchmark requirement for good finance department is that at least 50% of your time you spend on decision support. So as I said, that if you have advanced robust ERP systems and good processes, good documentation, good compliance, you should not really spend most time over here. This has been automated, this has been taken care by the systems and technology. You should spend time over there. But look, today most organizations still spending more time on this transactional accounting and compliance and controls than really decision support. So just to give you an idea what is happening. Let me go to the question box again to see what is there, so I can also answer relevant question at the same time. What is an ideal structure of finance organization in general, Shailesh? Okay, there is no ideal structure, Shailesh. It really depends upon the business model you are in. So I would say that it's customized from situation to situation. One structure which is working for a business very successfully may not work for another business. It is the role of the responsibility of the CFO as a leader of finance to really look at the business situation and based on that decide what structure may be ideal. Now again, finance, the topic we are talking about, finance business partner, is it really required in every business organization? Probably not. As I said, if there is no demand for finance business partnering function, why would you create one? That would create more frustration for the finance people. So it really depends upon the level of maturity of the organization. Now I know some of the case studies from some of the best organizations. These are Fortune 500 companies. I'll show you at proper time. In some organization, finance function is so matured that they provide strategic guidance from the finance department in those organizations, because their maturity level is so high. And in some organization, finance is just kept to the level of bookkeeping and transactional accounting, those type of things. So really it depends upon the business, and also, as I said, culture is very important. And the top people, CEO, CFO, really creates the fundamentals, creates the outlines for creating such culture. If CEO does not have respect for the finance people, probably the culture of the organization would be very difficult to reverse in other direction. And I think other question I have addressed, stop leakage. I didn't get that question fully. Sometimes we had to step the leakage and being a non-technical. So just rephrase that, Pankaj. I'm not sure if I answered that or not. Try to use different words so I could get that. I'm not getting the sense of that question. Okay, so back to the slide. So this is a slide which would tell you that what is the finance function typically generally offer and what it should be. In the previous slide, let me just go back to there. Sorry. Yeah. So what finance typically offers is basically reporting a past performance. That is what their expertise is. Well, the business has to look into the future. So what they need, especially from finance business partners, is predictive analysis. And other important items. So you can go on the list on your own, but let me pick a couple of things. So one is the predictive analysis for the future. That's very important. Other things are, I'm having some difficulty with my screen, so give me a minute. So risk mitigation, very important, is how to handle ambiguity and uncertainty. So in modern business environment, it's not only about mitigating the risks, it's taking risks, because there are many opportunities which require taking risks. The role of the finance business partner is to assess those opportunities and then help business partners understand the risk assessment. What is the risk profile of the organization? How much they are willing to take risk, and what are the potential of success or failure? Those type of analysis is really required. And other item to notice here is the second last from the bottom, technical accounting expertise, commercial acumen. Now, on the technical expertise, let me explain to you what is the general situation and why most finance people focus on their showing their technical expertise, not really gaining any benefit. Look, most of you are professionally qualified accountant, right? And most people in your organization already know that you are professionally qualified, which means they already assume that you are a financial expert. They already assume that you know IFRS. They already assume that you are good in control and compliance and reporting, right? You don't have to demonstrate that. What you need to demonstrate is your commercial skills, is your understanding of the business model. That is what they don't believe. That is what they doubt, that whether you understand the business or not. So if you focus on those areas which really demonstrate your commercial acumen, which demonstrate your understanding of the business model, suddenly your brand is changed. You don't need to worry about the financial skills or financial expertise. You are already there. And that is what the common mistake most financial people do. Just trying to show their financial expertise, and other people are saying, yes, you are an accountant. We already knew that you are an accountant and this is what you are showing. So just be careful. That I'm not suggesting you not to really focus on your technical expertise. It's very important. That is how you do your job. But when it comes to your interaction with the organization, non-finance people, focus on business, focus on commercial acumen, because that is where they doubt you, and that is where you have opportunity to remove their doubts. Okay, this one slide is from, I found it somewhere on the CMA network. So this is from Institute of Management Accountant. I didn't like it, but I just included it, that how these traditional organizations are looking at. I think it's a very narrow focus, like role of finance business partner as internal, external, cost reduction, cost efficiency, and value creation. Value creation, this concept has completely changed. So when we'll do the next session, then you will understand what value creation is. But just for your references, that is the guideline from a professional institute. It's not wrong, it's right in direction, but what I'm saying that it looks a little outdated to me. So you need to be careful that these are the traditional roles: cost reduction, business process re-engineering, but now and product service analysis. Today is much more aggressive and much more deep involvement into the business and strategy for finance people. Okay, this is the journey to the value creation. Again, efficiency of the business operation, drive analytics, improve decision making, and enable value creation. Again, let me explain the value creation concept next time. Just hold that thought, then you will understand it better. How could you really support the business in real terms? In terms of the analytics, this is a good slide, that it's not about the financial analysis only. It's about the And similarly, it's not about the financial management. It's about the business performance management nowadays, because financial management is dead. You cannot do the financial management sitting in the finance function. It's integrated. The new business models are fully integrated. Finance function is fully integrated. Whatever you are finding out in terms of the financial results are coming as a consequence of all the business things. You cannot manage the financial results simply from a financial point of view. You have to get involved into the business, and that is why concept of enterprise performance management is more relevant today, and that is what more talked about. And CFOs are not there just for the financial management, but the performance management. From a performance management point of view, you as a finance business partner or as an analyst need to get involved into the enterprise data and the big data. Look, ERP systems are very powerful, and then you have intelligence systems. A lot of data is coming from outside. So how do you make sense of all that big data? That's the part of the value added you can create in your business as finance business partners. This is also from CMA framework, actually CGMA, competency framework. So it's a joint effort of I think CIMA, UK, Chartered Institute of Management Accountant, and Institute of Certified Public Accountants, USA. That is their combined certification, CGMA, competency network. So it's basically identifying 4 skills, 4 areas. Technical skills, of course, that's very important, fundamental actually, but then business skills on the right hand side, so that you could really trust it upon, you could get involved, you understand the context of the business. And then soft skills at the bottom, like leadership skills and people skills, interaction, communication, all those things are very, very important. So that's a role of the management accountant, basically a term used for the accountants who deal with a business. So, or you can call it finance business partner, same thing. So role of finance business partner, role of management accountant is reflected here in the 4 areas, very important. Now this is very important slide with these 4 boxes you are looking at. So the big question we have to make the function of finance business partnering successful is that, look, if there is lack of finance capability, we know how to solve it. I can send my people to the training, I can provide some training, I can invest into the IT capabilities, I can invest into the process and structure, and we can gear up, we can be ready to provide finance business partnering. Now what happens if there is no demand? Despite our best effort as CFO or finance professional, business doesn't care. Business tells us all the time they don't need it. What to do in those situations? So this matrix is interesting. On the one hand, here you have low finance capability, right? And you have high finance capability on the right side. On the vertical axis, you have the low business demand and high business demand, right? So it's very easy. Look at the upper left side. If you have high business demand and low business capability, you can invest. As I said, it's very easy. In this box, upper left, you invest into the finance capability and you become at par with the high business demand and you can do a good job, right? If you have high business, high finance capability, sorry, let me cover this box first, the lower left. So you have low finance capability and low finance demand. What should you do? Do you need to do anything? Not necessarily. If that is what there are 2 types of organizations who fall into that category. A very immature organization has just started, very young organization, not really stabilized. So finance is doing its basic finance function and business is doing its basic business function. And really they don't have time and focus to get help with each other. It's okay for that younger age of the organization. Or the other type of organization that fall into that category is very advanced, mature level organization that already their finance function is mature. They know what they need to do, and their business is running on its own, and they don't need help from finance. That is also okay. You don't need to really inject those or touch those things working very well. Most of the time, where you need finance business partnering is the middle phase, where the organizations are really growing, improving their business performance, creating profitability, growing sales revenue, and that is where they need. So that's the lower left box. Now the right boxes are interesting. If the business has high demand and finance is highly capable, again, fantastic. So that's the upper right box, continuous improvement. So they need to work continuously and try to bring more improvement and more new scenarios and new ideas to work and create more success, right? The problem area is lower right box, that if you have high finance capability, but business is not convinced what to do, how to do it, and that there comes the political part of the organization, that it doesn't work simply. Although it looks like that if there is a capability, why not the business would use it, but it doesn't work based on people belief, based on the image, based on the branding, based on the previous experiences, based on the relationship, whatever it is. In those cases, the best approach or best option for finance is to take some proactive measures, take some initiatives, and try to identify a business problem and try to solve that business problem from their side. Now, in this case, business may not be asking it, but look, being in finance, you could get involved in any part of the organization somehow. That is the luxury and the capability finance people have. And this gives the enough leverage to CFO to identify a business problem and get involved. But initiative has to come from finance. So solve a business problem. I'll give you one example from my own career long time ago. When I was in Asia Pacific Asia Pacific region, working in the regional office as a regional financial controller, I had a passion to get involved in the business. So I was doing some traditional finance work at the regional office, but I wanted to do more on the ground, going into the business. And my focus was manufacturing accounting. They have 14 regional plants in the Asia Pacific region. So I went to a training. That training was activity-based costing training. I just went there to enhance my knowledge. I liked the idea very much. That was back in 1996. I liked that idea very much. So much so that I got excited that we should do in this company activity-based costing. Philips Fortune, globally Fortune 500 company. So it was my initiative. I went to my regional CFO and presented the idea that, look, there is an opportunity. If you buy into this idea, I could take the lead implementing activity-based costing and help the business to find out more relevant information and probably some business improvement. He agreed with that idea. And then he asked me to present that idea to the regional president, regional business head. I prepared a long presentation, practiced it, and then I made that presentation directly to the regional business president. That gentleman also agreed. That was good enough for me to go on my own. Once that happened, I got the approval from all the relevant people. I deployed the process of activity-based costing in all regional plants, 6 regional plants, and worked with the plant directors in those areas and the regional manufacturing director as well. And we, long story short, we rolled out activity-based costing. Now, this was something not asked by business. It was an initiative from the finance department, from one person. But working through a systematic way, it found its way and ultimately is implemented and created some business processes. So that was one example you could use to really, in those situations where finance is not really being considered as a value creator, you can take some initiative on your own and create some results to change their perception about the value creation finance could do. Okay, so building finance department, I think I already explained, but let me see if there is anything left here. Prove its capability by solving a business problem, initiate. So other ideas for finance to get involved in the business, create cross-functional projects. So for example, you can identify a project like cash improvement, cash cycle improvement, and start from the finance side, but include the people from the purchasing for suppliers and sales for the customers. And that could be a good project to improve and really show your muscles in the organization. Balance scorecard, activity-based costing, value chain analysis. These are all ideal projects, ideal strategic tools you can get involved and drive from finance side, and that would make significant improvement in the image of the finance department. Or you could do, if you are already a finance business partner, you could do those projects. Also get involved in the implementation and operation of ERP systems. In some organizations, finance is already heavily involved. In some, they are not. But this is an opportunity that you get involved in ERP and you get involved seriously, deep level in the whole organization. And CFO, again, CFO has a lot of leverage. CFO's personality, his personal brand, the way he looks at the organization, the way he gets involved, makes a big difference for the finance department's image and perception and its selling propositions. So in my opinion, whether you are a CFO or a controller or an individual finance professional, marketing and PR is important rather necessary. And again, this is not really just to boast about yourself, but to really create awareness. Personal marketing, for example, some people don't think is good or is accepted as a requirement. But in today's environment, if you don't do personal marketing, people don't know about your capabilities. People don't know what you could create value for. So you need to do those things. Look, Apple has fantastic products, but if Apple doesn't do any marketing and branding, nobody would buy those products because they would be not aware of that. So maybe you have a level of intellectual competency there where you could do a lot of things. So you need to ensure that people understand what you could bring to the table, what you could offer, at least to that level. Okay, building service orientation through finance service. So this is one of the very strong technique I have used many times, and some companies do that, some companies don't. But if this is in your jurisdiction, then try to do that. Conduct a finance department survey at least once a year. So create a questionnaire and send to the non-finance department and ask their opinion about the quality of finance service around technical capability, timeline, attitude and friendliness, ease of access if they are available, customer satisfaction, how do the people deal, how they solve the problem for the organization. And areas to measure are the financial reporting, decision support, transaction payment. Like many times supplier would complain about the delay in their check processing and payments, and purchasing department would support that. So let them give you their opinion. What do they think about those things? And then take those feedback in terms of the measurement and the opinion and try to make an improvement plan for the next year and inform those people that based on their feedback, what are you doing? So that would enhance more credibility in your relationship with them. Okay, so in a nutshell, what is finance business partnering? I think you have seen this slide, this framework before, and this is what we are using. This is what I use in this program as well as in many other leadership programs. And you see there are a lot of competencies, the personal leadership, public leadership, and strategic leadership, but it all boils down to one thing only, which is influence. Influence is not easy. It's created after a lot of efforts. Influence is coming from your personal leadership, your performance, your emotional intelligence, your branding, your presentation skills, your communication, your knowledge, etc., etc. But end of the day, influence is the most important thing to really determine the success or failures of your life. So even that is true for finance business partnering. And all those things matter here. All those things you are looking at this slide matters here. So assignment I have for you for today, and we'll continue to talk about this assignment because we have 3 sessions to cover these topics, but I just want to have you start thinking about it. The best way to really improve your relationship and your brand with non-finance people, if you can, do a finance for non-finance training for the non-finance people in your company at workplace. Let me take the right slide here. Yeah. So commit now. We are sitting in the month of September. Plan that you will plan and organize a finance for non-finance training at your work before end of the year. And make a commitment now that you would do it before year end. You have a little over 3 months, which is a sufficient time. And identify the level and number of your target audience. Who would be? If you are at the senior level, maybe they are executive. If you are at the middle level, maybe they are managers. Maybe there is a group of people, but identify that and identify the number of people who would be there in your training. Then decide about the length of training. It would be half day or 1 day usually, depending upon the level of the people and their their position involvement. Then create an interesting agenda for half day or 1 day. Interesting, which means more business oriented. Because in finance for non-finance training, you don't want to teach debit and credit. You want to teach business. How does it relate to the finance and accounting? And then present this idea to your boss in a compelling way and get his okay, get his approval. Then announce, once you get the approval, announce the training and send the invitation already. If it is 2 months, send 2 months in advance so people could talk about it and prepare about it. And after this is done, these steps are done, now you prepare yourself in detail to deliver a memorable training. So idea here is that first you commit yourself. First you lock in yourself. Once you have presented the idea to your boss and your boss has agreed, it's going to happen. Now you would do it with a lot of passion and accountability, right? Otherwise, I have seen people just planning, it never happens. So I hope you would take this assignment seriously, because it's really going to make breakthrough results for you if you are able to do this before year end. Let me look at the question box one more time. Major time is spent on data crunching. Yes, that's right. But that should not happen, because as I said, with the availability of the technological solutions, we should not spend that much time on data crunching. CEO want me to handle the strategic thinking of the company. Strategic thinking for the company. If I'm not sure, how would you do that? Because that's done on the individual level. Maybe you could send your question in a more specific manner. Being a controller, we had to look for the losses. For example, production loss and that. Give me a second. Somehow I'm not able to read the full question. Give me a second. Can you give example of training or finance for non-finance? I think I have already shared my master copy of finance for non-finance training with most of you. If you have not received a copy, send me an email and probably I'll send you that. This is more than 200 pages, slides actually. You can customize to your requirements. So if you send me an email, I'll send you a copy free of cost. I haven't given any training. Oh, that would be a good opportunity for you to do that training. How to create marketing? This may explain that this is part of your job. Yeah, these questions I have addressed before, Ravi, but I'll tackle probably in the next session. Let me take this question from Pankaj. Okay. It's a long question. Let me read it for you. Being a controller, we had to look for the losses, production loss, and that depends on the overall efficiency of the machine. For example, availability, productivity, and quality. Being a non-technical person may challenge on our understanding of the issue, how we counter that. Well, you work with the business partners. You work with those people who are knowledgeable. Because when you do a financial analysis, you may know the financial analysis, they may know the technical part, and that is how you create teamwork. They will help you understand how the machine operates. You don't have to do everything on your own. That's what the finance business partnering is all about. So don't try to become master of all. Ask them. When I did activity-based costing, I spent a lot of time on production floors. I did not sit in my office, because that is the only way to really understand the activities and business processes. And production supervisors, production foremen, production managers, factory managers, plant managers, maintenance managers, these are the people I work with at that time. So it's not a single individual effort, it's a teamwork. Okay, in the last, so we have 2 more sessions on this topic, so I hopefully cover more and you can ask more. You can also send your question in advance, so I'll provide you more answers. But for the last 5 minutes, I want to share you a different topic. And this topic is, I think many of you have attended my webinar, which I did recently this last week actually, on the work-life integration. And in that webinar, I also posted a blog last week in anticipation of that webinar. So there was some discussion and debate on that part. But the webinar, I'm giving you the link. If you have not been able to attend that, you can watch the webinar replay. But more important thing I want to share, that this is what I wanted to do for a long time, that really do a live workshop and session for the work-life integration. This is a different topic. I have been working with people like you for the last 3, 4, 5 years. And I think one of the major issue with most finance professionals is that how to really time issue, how to manage time, and how to really balance out their work life. So I'm a big proponent of work-life integration. I think work-life balance doesn't work. That is the only way in today's business world to be successful and survive and grow is create work-life integration. And many people don't understand that part very clearly. So if you have interest, you can go back on LinkedIn and read my blog, and you will also see some negative comments over there. So you could understand what is the lack of understanding and confusion about that part. So anyway, so I have planned a 3-day workshop in December. Basically, this is a long weekend in Dubai. 1st, 2nd, and 3rd December. This is the Friday, Saturday, Sunday. And I think for the people in Dubai, it's very convenient to use that long weekend if they want to change their life, because this would really be a life-changing exercise session. Now, in that workshop, I don't have to give lecture. There is a lot of practical exercises, individual and group level, because lectures I could do very well through the online communication like we are doing now. But that would be a practical session. So we'll start Friday 4 p.m., which means that even if you are flying from Saudi or from other Gulf countries or Pakistan, India, you can take the same morning flight and arrive before 4 p.m. Friday, and we'll finish 3 p.m. Sunday. So you can take a flight back if you are outside UAE, just to make that convenient. We did similar pattern before, and it worked very well. So as I said, more practical advice exercises. It's a life transformation experience. So I have, as I said, wanted to do for a long time. I have planned it very carefully. And I have included the things which would really change your life, change your mindset in 3 days. And the idea is that it should close the gap between where you are today and where you want to be. So your timing is running out, and something has to happen soon to really make results out of it. So let me give you a quick snapshot that how we would be spending our time in those 3 days. So first day is basically preparing for it. So 2 major things I want to do is creating, understanding, digesting 2 frameworks. First framework is that it's not about time management. It's about energy management. How do we manage our energy? That really determines what we accomplish, how we accomplish. And second thing is, it's not about work-life balance. It's about work-life integration and understanding the concept deeply on the first day. Then we'll move into a long exercise, which is called life visioning exercise, several hours. And you will go through that exercise, and you will be able to identify your personal gap analysis and goal setting. So by end of the first day, you are clear about what you want to bring change in your life and where you are point A and where you want to be in point B. That clarity is achieved on the first day. Second day is very intensive. In that day, you will work on really creating change. So first is starting with the deep knowledge and understanding of the brain functionality. I think you have heard me listen about 3 brains, 2 brains, right brains, left brain, conscious, subconscious. That's what we are going to talk about in detail through some exercises. We'll understand that part. Then we'll work on building habits, changing bad habits, learning new habits, and then learn how to do it. And finally, in the end of the day, we'll focus on advanced career breakthrough strategy, fixing our game plan for external success, and also leveraging the 2 very important things I have emphasized even in this session: personal branding and relationship and networking. How do you use those 2 weapons to really leverage your success? Third day is more about wrapping up. So how to achieve peak performance. And here we'll talk about the 4 dimensions of your life: physical, mental, social, emotional, and spiritual. These are the energies you consume, and you need to keep a very good balance into the 4 faculties of your personality to make best out of it, and creating work-life integration. So end of the day, you would be basically having a life plan going forward and identifying very clearly your life purpose, passion, and vision, and values and life priorities. In terms of the workshop outcome, clarify your life purpose and vision. That's one. Deep understanding of your values and work, family, and self priorities. So life is really not about living in 9 to 5 compartments, but really understanding your priorities. Many times your family priorities on the top, personal priorities on the top, many times your work priorities on the, it's not about work schedule, it's not about weekdays and weekend, it's about your life, it's one life. Peak performance mindset, fueling physical, mental, and emotional energy. It's all about mindset. I mean, expert says that 90% of your success or failure is because of your mindset, your beliefs, your understanding of different things. That is how your success and failure determine. So mindset is very, very important for peak performance. And finally, an energetic leadership profile with more confidence, higher influence, and increased passion for work, family, and personal life. That is what we want to achieve in these 3 days. Now, timing of this workshop is probably very timely. That in less, if you attend that workshop in less than a month, you would be starting 2018, right? So what you could do, if you pass through 3 days life transformation, you will have a fresh mind, fresh vigor, fresh energy. You want to really do something about your life. So what I'm doing along with this workshop, that I'm charging very nominal fee like $495 for the 3 days, which hardly covers my cost because I would be flying from USA. Now, you might have noticed I'm not doing any in-person workshops anymore. Most of the time I'm doing online, but this is the type of the workshop I would only do in person. So this is the first live workshop I'm doing in Dubai, and I'm charging nominal cost. You can also pay in 3 installments if you want, if that is more suitable, like 165 first month, second month, third month. But what I'm doing extraordinary here is giving you a bonus, and that bonus is really giving you, if you are familiar with my CFO development program, which is a 12-week program, very intensive. I have done that with 6-7 batches, so probably 150 people have gone through it. This has, I have done it for 6-7 times, and I have a lot of replays and recording. I'm giving you 18 hours of replays and recording from that program, complete program, with more than 300 PDF slides. So this is a lot of stuff. You cannot go on your own. What I will do, I will give you free if you register for that 3-day workshop, and then I'll give you a framework in the workshop, how to use that. So come January, on your own, with your own pace, you would start using that program, listening, watching, and applying in your life. And hopefully in 3 to 6 months, you would have a complete solution in terms of your mindset and in terms of the practical. All these advice in these tapes are practical stuff. One day you could see, second day you can apply. And you would have a lifetime access. So this program I sold when I conducted for about close to $1,000. You are getting completely free because I want to give you a life transformation solution. So 3 days you work with me live in person. Hopefully we'll achieve something out of it. And then starting January, you follow my framework and you go on your own. You could complete in 3 months or you could complete in 6 months, decide depending upon your phase. And hopefully 2018 would be a turnaround for you. So I just wanted to share with you. I'll send you the link to the webinar replay. First try to watch the replay of my webinar because that would give you a lot of good ideas what I'm talking about. And probably if you make up your mind, then register for this workshop. Now I'm not making announcement publicly for this workshop because I think people from my different programs right now, they would already be sufficient people interested. So I will fill that class. So that's why I shared with you, but see yourself. Okay, so I think we have covered the topic of finance business partnering sufficiently today. If you have situations, questions in your practical life about this topic, you can send your question in advance to Sabah or to me. I will address them in the next session, or you can ask during the next session. Next session, I will share with you more on the business side. That okay, so you have enough on the technical side. What you need to learn from the business side in a very short, concise manner. Not really going back to the MBA program, but how could you learn fast? And hopefully you will get lot of good information. And then finally we have the case study. So I think that's it for today. Thank you very much for listening, and I'll see you next time. Thank you very much. Bye now.